You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 3 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune. I do love that tune. It really gets me in the mood for some futures options. Welcome to This Week in Futures Options, a program where, as the name implies, we break down all of the fascinating activity across the broad landscape of commodities options. So maybe we're talking crude, maybe we're talking gold or silver or soybeans or rates or FX, whatever is lighting it up that week. It's going to be on This Week in Futures Options. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, hopefully at least ever-expanding Options Insider Radio Network. 15 programs for you guys to choose from, including quite a few archived episodes of this fine program, TWIFO. You want to hear what we're talking about with FX and rates post-Brexit, or maybe in the big soybeans explosion and then implosion, what we were talking about there, or crude. You can hit all the archives there. The easiest place to do that, the mothership, the flagship, theoptionsinsider.com, or surf on over to your favorite app store. Excuse me, not even your app store. That's coming up in a second, but your favorite podcast store, like iTunes or TuneIn or Stitcher or wherever you like to get your stuff, including Google Play Podcast now, and subscribe to TWIFO there. I don't mention this a lot, but by the way, while you're doing that, if you like the show, leave us a nice review over there in iTunes or Google Play, wherever you're getting the show. That always helps. And if you don't like the show, hey, keep your vote to yourself. No, I'm just kidding. You can write whatever you like over there. We don't really talk about the reviews that much, but hey, maybe now and then it might be fun to encourage you guys to go forth and say what you think about the program. Of course, you can always hit us up via all the other ways. The more immediate feedback, the reviews on the show probably won't make it into the show in time, but you can hit us up via social media, twitter.com/options, facebook.com/theoptionsinsider, via the website, or via the old-fashioned way, questions at theoptionsinsider.com. Of course, it's all baked into the mobile app as well, so make sure you hit us up there as well. And joining me on the TWIFO program yet again this week, my cohort, my partner in crime, the man about the country, because every time we beam into him, he's in a different undisclosed location. The creator of a little platform we love around here called Quick Strike, Mr. Nick Howard. Nick, welcome back to This Week in Futures Options. Sure.
Hey, Mark. Yeah, I'm not going to tell you where I'm at this time, but I'm in Colorado. So
you left
a couple weeks ago in Lockport, Illinois. Now
Yep.
I'm in Colorado. So we travel a lot for soccer, but here's where we are today, but we're in good stead and ready to go.
He let the cat out of the bag a few sentences in. I was going to leave it as a mystery, sir, that you were in some undisclosed underground location beaming into the program. But you let it out. You're in scenic and lovely Colorado.
Yeah, it's beautiful here. I figured I might as well, since I didn't want to be the international or the national man of mystery, so to speak.
Let's kick off on a product that is not a mystery, unless maybe you're talking about what's going on from a volatility skew perspective. That is, of course, Crude, Texas tea, the black tar, call it what you will. It's a hot product with a lot of our listeners, a lot of our audience in Crude. Another interesting week out there, at least from an underlying perspective. The future's off about 2.5 handles, depending on where you're looking out there. So kind of coming off. That kind of seems to give strength to a lot of what we've been seeing out there of late, Nick, which has been, talking from a volatility skew perspective, all the interest, all the premium has been in the puts, and I guess maybe this week's activity bears it off about 5%, again, depending on where you're looking in the term structure out there. So Crude taking a bit of an exhale, a bit of a relaxation this week out there. Not surprising given the decent move percentage-wise in the futures that we saw. A lot of action kind of aggregated there right in the front of the term structure when it comes to the options, the front month. Now the SEP, moving on down the year here, already in September, Nick, it's crazy. The SEP leading the charge with about 68% of this week's volume coming in that one chunk out there. Overall open interest also up this week, about 7%, which is saying a lot for Crude, because that's a decent chunk. That's about 120,000 contracts that they gained this week. So, WTI is a pretty active contract, and gaining 7% in this week is no mean feat. And, of course, it may be interesting to some of you, given the net move we saw out there in the underlying, that the big winner, the big strike du jour, I guess number one with a bullet, Nick, a good chunk was the SEP 50 calls, 34,000 of those bad boys lighting it up this week, which again may surprise a lot of people, given the fact that there was a bit of a sell-off, or at least net on the week out there. And what's interesting too is that wasn't, Nick, one kind of explosion of trading in one day. Those 50 calls was spread out pretty much throughout the week. We saw about almost 5,000 a day, about almost 6,000 on Monday, about 8,000 nearly on Tuesday, about 9,000 going up on Wednesday, 6 on Thursday, and about 5 again today. So that was pretty much the strike du jour. If it wasn't so much volume, I might say, hey, maybe a newsletter is recommending that strike or something along those lines. We see that a lot in the equity space when one strike becomes so active so quickly. But this just seems like a very broad spectrum of players all wanting to pile in here to the 50 handle this week, and maybe taking advantage of this week's pullback to do just that. So what do you think, Nick? You think the bulls are back judging by this 50 call activity, or do you think what we're seeing from the volatility skew, it's still all bears all the time for the foreseeable future out there in Crude land?
Well, like we talk about all the time, it's probably a little bit of both. People who think that there's some upside into the Crude probably are glad to see this pullback so they can get in on some strikes at a little bit cheaper volatility, a little bit cheaper premium levels. And, thing to keep in mind there on of those 34,000 that trade, probably had a 6,000 or 7,000 change in open interest, or whatever reports got it somewhere between 6,000 and 7,000. So, probably a little bit of interest, thinking that this is a pretty good sell-off here. We've been trending sideways for a while. The market is tending higher based on whatever fundamentals are out there. But those aren't the only really interesting things happening. There's a significant amount of trade and strikes above that as well. And like we always talk about, the put call ratios are pretty even. So in that front month September. So on the volume for the week, front month is the put call ratio is about 1, which is like we always say, 1 is meaning it's an equal weight between the puts and the calls, and generally speaking, the open interest ratio hasn't changed either. Pretty steady as well. So I think, we've talked about it in podcasts past, just about how you start to trend. So you're going to see some trade around the money. We're off $2.5, like you said. Volatility's up a little bit for the week. The skew is kind of backing off a little bit on the so the calls are a little bit less cheap in comparison to the puts, and a lot of that has to be with the puts coming back in favor of the calls, not so much coming up with the puts being a little bit more expensive. Here, let me look at that exactly how it looks. I can get the quick skew numbers up there, so I can tell you which direction that is. So what we saw, we see the puts coming back a little bit more towards the money levels in terms of volatility. I'm sorry, the calls coming back a little bit more towards the volatility levels, and the money in the puts they were kind of steady for the week. So there's some change there. You see some people come in at the 50 strike. I think you also you probably took a look at it when you were looking at the table. A lot of 52 strike, 53 strike, 55 strike. 53 was a little bit more opening, 52 a little bit more change in open interest to the upside, 53 a little bit close, and then sort of the interesting one to me were some openings in the 68 strike as well as the 70 strike. So of the 8,500 about that traded in the 70 strike, 7,500 that is new interest, and we saw some similar things down and on the downside. 27 and the 28 puts also had some increases in open interest on about 10,000 each for those strikes. So you get a trending market. You're going to get people who are you start to think they missed the boat on the upside, like you said. So maybe they're coming back into the market. We're seeing that with the big volume there and the big change in open interest. About 25% of that volume was an opening in open interest. So I think we'll watch and see what happens if this trend continues lower. It looks like some people think it's going to be a little bit lower with those opening in the high handle 28, 27 puts. But more or less, when you think about it, just my general sentiment looking at this weekend options report this week was just sort of not anything really exciting. Just sort of moving, sort of going lower. I think that we got a little bit of a kick in volatility for the week because we sort of went a little bit lower than people probably thought in a trending pattern, but in the skew coming back a little bit as well. So maybe we hit some levels where people said, okay, maybe there's going to be some continuation on the downside here.
It wasn't really an active week from a volume perspective for pretty much any of the products out there this week. It was kind of a light week, getting into late July, into early August. Of course, a lot of the business goes on vacation, so we see some of the volume numbers drop. Some of these products get a little bit thin. You mentioned what's been going on up there from a vol perspective in WTI. It's pretty interesting. Vol ticking up, which is kind of not overall surprising given the fact that we're moving down that skew curve. The puts are more rich than the calls, so you're going to get a little bit of an increase from a vol perspective. Interestingly, though, overall, if you're a premium harvester out there in crude, it's not like these are boom times. A lot of the aggregate measures of crude vol, whether you're looking at OIV or maybe OVX, hovering at about 50% of where they were at the heights back in mid-February, so they're touching around the 80 level or so. These days, about half of that, about 39 to 40. So vol pretty much cut in half out there in crude land. Again, that could be a positive sentiment to you, and maybe the fact that all these people are piling into the upside up there on the 50 strike and above, maybe taking advantage of that fact. Vol is down, and certainly from a vol skew perspective, the calls are much cheaper than the puts. So maybe if you are a bull, this is an attractive time, or perhaps even more attractive to do one of those old bullish risk reversals, sell those inflated puts, buy the cheap calls, maybe get a credit for your efforts. So interesting time out there if you are indeed a crude bull. Although, this week's paper aside, looking at the skew out there, maybe a lot of people still leaning more towards the dark side in crude. Speaking of how they lean, Nick, we put together a little quick poll before the show, asking our listeners out there. We said, hey, which commodity product do you tend to trade the most? We gave them pretty much three choices and had them, if they wanted to fill in, they could fill in another one. We gave them a choice of crude, gold, soybeans, or other. Nick, it's only been about a couple hours, but what do you think is winning the poll so far, sir? I can't really answer because I'm seeing the answers right now, so I would be cheating. But what do you think is winning?
Well, I think probably from a general standpoint, it probably is crude. But the beans, again, the beans are back to levels prior to all this talk of the problems in Brazil and that type of thing. So, I mean, they're off so hard. My guess would be that it's a pretty close race between, I'm going to say this. How about this is for a non-answer? A pretty close race between crude, beans, and other. Just because, although other, it hasn't been an exciting week. It really has been sort of a trend up and, not much happening. You're watching the stock, the S&P index, or just stocks in general. They're sort of moving around, within a pretty tight range. So I'm going to say crude, pretty close between crude and beans. But depending on how many listeners we have from each of those populations, the beans had some opportunity there. So maybe it might edge out crude this week.
Yeah, the beans have been kind of the activity leader of late, but not so much in our very, very quick poll here. Again, it's going to go on for more time, and we'll probably see these numbers even out a little bit. But right now, crude leading the charge with about 41% of respondents, Nick, choosing crude. That doesn't really surprise me. If I had to pick, I would say crude. Crude certainly still resonates in the imagination of a lot of our listeners out there. Gold number 2. With 35%, Nick, and down there at number 3, the soybeans with only 18%. So all that movement in the beans, Nick, not translating into the love from our listeners there. And, of course, 6% saying other, which, of course, spreads across the broad spectrum of commodity-type products. Since we're talking about beans, let's get into it, sir. The beans. Oh, before I even get into that, I neglected to mention at the top of the show, if you want to generate your own TWIFO report and follow along with Nick and I, see all these numbers for yourself, and maybe play around with some other products we're not talking about on the show, you can do that. It's all free of charge. CMEgroup.com/TWIO. This week in options, that's where Nick has all of his quick strike tools set up for you guys to come play around with completely for free. You can see a lot of the stuff we talk about here, and if you really like what you're saying, you can always upgrade to more stuff over there at the Quick Strike Mothership. But kick the tires first over there at CMEgroup.com. And if you did that, if you were following along with Nick and I, you could pull up what we're going to talk about next, which are, of course, the beans, the magical fruit of soybeans. It's been an interesting product to watch over the last couple of months. This week, the futures, it's like they can't stop rocking and rolling out there, huh, Nick? Off another 6% this week out there in beans land. It seems like that's almost like a broken record. So every time we're on the show, the beans are moving somewhere. They're very rarely sitting. They're limit up, maybe they're limit down, but they're going somewhere. Isn't that the case, Nick?
Yeah, I mean, it really come off hard this week, and even harder today from a percentage standpoint. Probably almost 40% of that loss is coming on today, and right now the price is around the $10 mark, which is just psychologically has got to be a level, right? We talked a few weeks ago how about 11 was a psychological price, and we started to see a rally above that. So when we hit this 10 print in the September, so it's kind of hanging in there right now. It looks like that's the last, and I would imagine if we see anything significantly lower, we did go down like to 978, I think, in the September today at some point. But it came back and hung around here. So we're going to see probably a support around 10, and then we'll have to take a look at the charts for next week and see what we think is going to be the next level down. But yeah, volatility off significantly this week, 6%, 5%, and 3% in the 3 active liquid months. Open interest pretty flat, down a little bit in those. But the big thing is, and this is what we've been talking about quite a bit lately, is the skew is off 3.5% to 4%, and that's with and when we talk about that, we're again, call minus put, we call it 25 delta, you call it the 50 delta, but that's really the calls have stayed pretty much bid throughout this week, but what we're seeing is the puts are kind of catching a little bit of a bid, and you would expect that on a significant break like that when we see 60 cents lower, and almost 30 cents lower today. So calls still bid, but the puts gaining and volatility moving more toward the at-the-money vol. So it'll be I'll have to pay attention to see what happens for the close and see how that 25 delta put settles against the at-the-money today. But the curve's changing, so if you go out there and compare the vol skew, you're going to see the puts are coming back in fashion. And again, as you would expect, I would have thought the calls would have come off just a little bit more, but they really haven't. They've been pretty steady for the whole month of July, pretty much. So I think again, you got to love it, right? If you're maybe you don't love it so much if this is a commodity that you produce and sell, but if you're somebody watching the market and you're looking for some activity and some volatility, there's some things happening there. There's some movement, so you can trade futures, right? There's some movement in the options, but when the vol comes off, you don't know how great being long options, even if you guessed the right direction, you got to really pick the right strike to make some money there. But that's the big thing: vol off, skew kind of coming back, and it's still bid to the calls quite a bit. But the fact when you get the change in vol and the skew to be 3-4%, that's fairly significant. So what else we got here? We got looks like the $12 strike, there was some closing there. Of the 40,000 that trade, almost 22 or 23% were closing of those. So you got a pretty decent volume and a pretty decent close. So people may be thinking that, that's the end of up there. I'm going to take my profits, or I'm going to get out. Or people who were short it are going to say, here's my, probably more than likely these people who were short going, okay, I'm getting out and get my opportunity. I'm down 6 handles this week. It's a pretty good chance for me to cover and make some money, or to make it so I could trade some other things here going forward. And other than that, there was nothing special in terms of particular strikes that were really taking place. The volume for the week, generally in the front in the September, it looks like it was pretty even to the call, so like a one put call ratio. In the October, it was definitely more fashionable to own puts, but that opening.
Looks like we're having some problems with Nick's undisclosed location. So while I really quickly make some adjustments on the fly here, listeners, it has been interesting to watch. Of course, beans still, due to the nature of that product, still very heavily out there in the November contract timeframe, where the lion's share of the activity was yet again talking about for soybeans this past week. About 72% of the overall volume was out there in November. So that's where we saw a lot of that same paper again this week as well. The rest of the months kind of negligible, factoring in there, and about the looks like the actually 1,200 call leading the dance. So pretty aggressively out there in November with about nearly 40,000 of those contracts. Let's check back in with Nick at his undisclosed location. Nick, can you hear us now?
I can hear you. How about you? You got me okay?
You sound much better now. Yes.
Okay, yes, I switched from Sprint to Verizon, so you should get a much better.
There you go.
Much better. So basically, all I was saying, if I did get cut off, just to summarize, and I won't take up too much time on that, it's just the ratios in the front month are showing that people are still sort of 50-50 on which direction we're going to go, and it's for the new crop, the November option. It looks like people are more biased toward the upside in terms of volume, and still generally sort of flat, but still biased towards the calls in the open interest even. So you get a big move down like that, you're obviously going to see some change in sentiment, but at the same time, front month still has 35 days left expiration. People are still probably tossing up, thinking that there's either direction is a possibility.
Let's move on to something precious, in particular, the shiny stuff, gold. A little bit more of a quiet week out there than it has been of late. Of course, we saw such a massive flight into gold post-Brexit. We were remarking upon that on this program, as well as our Volatility Views program, that all the action, all the activity back a couple weeks ago, all the love was in the call wing from a vol skew perspective, and it was looking pretty out of control out there. Fast forward a couple of weeks, and now things have evened out, much more symmetrical out there from a skew perspective. Calls still leading the charge, but nowhere near as aggressive. Puts have come back in force again this week, kind of leveling things off overall. From a volume perspective, the big COMEX gold options doing about a 1% OI increase this week, which translates to about nearly 9,000 contracts. That's not a mean feat out there by any means, and of course, still a lot of that, almost half of the paper aggregated there in the front to August time frame. So still hard to really call it August. Only about 4 days left, not even, for those contracts to go away before we get into full September out there in the gold contracts. And again, like I said, not a huge underlying movement this week, not even a full percentage point off, only a few handles net on the week, and so the vol creeping up a little bit, but nothing too substantial out there. The volume leader out there this week, again, kind of reinforcing that narrative we were talking about. A very near-term paper, like I said, everything kind of floating in those last few days to expire. It was the 1,300 puts leading the charge with about 6,000 of those bad boys lighting it up this week. Let's see if we can break down, diving in to the quick strike tools here to see exactly when those went up. And again, they were pretty evenly spread out on Wednesday and Thursday, with nearly half of them coming on Wednesday, about 1,700 coming on Thursday, the rest about Monday, about 700 or so. So fairly evenly spread out throughout the week, with a big chunk coming there on Wednesday, and just a hand, about 600 or so going up today. So interesting stuff, how people are kind of flocking in again. I guess, as it was a few weeks ago, would have been taking advantage of some cheap volatility skew out there. And the put wing this week, I should say, not so much out there from a gold perspective. That said, Mr. Nick from your undisclosed location, a.k.a. Colorado, what else caught your eye out there, if anything, in a relatively quiet week from a gold perspective?
Yeah, it's unfortunate, but not much really of interest there. Vol is sort of, it's pretty steady overall. Skew didn't change that much this week. There were some wacky strikes that traded in some of the expirations, but nothing really of significance in terms of opening positions or closing positions. So, really, like we said, like we just sort of generally had for the notes for this week, it was just sort of a trending sideways type of thing, waiting for the next next big national or global event. But I can't really, the fact open interest up a little bit, like you said. So it's always good to see that still on a quiet week, because if you start to see a lot of closing down on a quiet week with no volatility and the skew not changing, then you think there's a lack of interest there. But until we get some other news, or until we see a breakout one way or another, it's not too exciting, right? So I don't know. How was your vol views conversation this week? Was there much of interest there, or was it sort of a similar take on things?
No, it was a similar conversation there. There wasn't a heck of a lot. Most of the conversation was about what we talked about at the top there, where the skew, the evolution of the skew, where it was so markedly heavy towards the calls just a couple of weeks ago, and now having almost completely come away from that. So clearly, and that combined with, of course, the volume activity we were just talking about, the puts kind of leading the charge. Clearly, puts are back in force in favor out there in gold, and probably will be for some time as you get a little bit of vacillation here into the summer months, unless something crazy happens with the Fed next week, or some other shoe drops from Brexit, some other macro event that causes perhaps yet another surge into all things shiny. Speaking of all things shiny, really quick, we'll just wrap up here for the top section here, the top segment on silver. We've been hitting on this a lot lately. This is kind of the forgotten stepchild of the precious metals stuff, and not so much the last couple of weeks where it was really lighting it up. We were joking, the werewolves not having too much fun out there in the commodity land over the last couple of weeks, as silver was kind of leading the conversation. Big moves in the underlying, big moves in the volatility skew, big moves in volatility pretty much across the board. This week, kind of following along with its big brother there, gold, and not really doing a heck of a lot. Certainly quiet compared to the last few weeks. Overall, the futures ending the week down about half a handle there, about 2% or so. So not an enormous week out there. From a silver perspective, the big volume leader again. Actually, first off, the volume was relatively evenly split between those soon to go away AUG contracts, as well as September out there with a little more than a month to go. Right about 35 to 38% on each of those, so fairly evenly split. The overall volume leader, if you can call it that, because it was a pretty quiet week out there, was about the 18.5 puts actually. So about 1,100, nearly 1,200 of those going up in September. So that was the big trade of the week. Overall open interest, though, even though it was a quiet week, up about 3%. Again, you can do that with a product like silver. It doesn't do a heck of a lot. It's only about 3,000 contracts over there. And, of course, with a little bit of a quieter week, a little bit of things settling down, we saw that volatility skew, that 50 delta risk reversal. I don't care what Nick says. It'll always be 50 delta to me. Is coming in about a vol point, pretty much across the board, except for the longer term months where they're about 3/4 of a vol point coming in. So a little bit of the vol coming in, a little bit of the futures kind of relaxing, and not the overall, not the most active of weeks. Any other nuggets catching your eye out there in silver, Nick, before we answer some of our listeners' questions?
Yeah, I think probably the biggest takeaway on that is the skew. And again, I think what we're generally seeing is the bid option, whether it be the call or the put, was hanging steady. It's just was the option that had been beaten down. And in this case, for silver, the put had been, about over the last few weeks, about 3 or 4% cheap to the at the money. Not necessarily 3 or 4% different, but 3 or 4% difference, meaning, just a net percentage. So if it was, 10, it was 7 in the put. So we're seeing all those sort of beaten down portions of the vol curve or the vol skew sort of catching back up and moving back toward the at the money. So like I said before, and I think I mentioned it last week, it's good to see those traversals back to where people expect them to be or where it typically is, because that means there's trade there. That means there's opportunity for people. But again, even by silver standards, we got a pretty quiet week. When you're talking about 6,000 contracts being the big winner this week, or a total of 8,000 in the front month. So again, same thing. A little bit pushed down, $0.50. That's 2.5%. But vol paid for it. And most importantly, like you mentioned right off the bat, skew came in. So, not so much of a panic anymore. But that just shows you, right, Mark? It just shows you that there's opportunity there. Something gets bid up or it gets completely out of whack. It's probably opportunity to get on that and trade it and wait and watch and hedge or spread. But it seems to come back in line.
And speaking of coming back in line, it's time to bring the show back in line with some of your questions in our Futures Options Feedback segment.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Like the man said, time for your questions to take over here on the old program. Got some good ones this week, Nick. Let's dive right into them here. Let's start off with a question from Oz22. He asks, a very, very timely question given what we just wrapped up talking about. Why do silver options do so much less volume than gold options? Interesting question. We were just talking about it. Silver, still kind of the stepchild, the forgotten sibling to the big shiny stuff, gold. I think there are obviously a few reasons for that. First off, gold obviously has a huge market wherewithal presence. It's the big product in terms of having, your economic exposure. Every big portfolio always has some sort of exposure to gold. Gold, of course, was the derivation of our currency until a few decades or so back. Some people perhaps out there still wish that it was. That's a conversation for another day. Gold also has a lot more use cases in not just jewelry, but in electronics and production. It's a much more of a widely used metal out there across the board. So that drives a lot of interest. And of course, on times like Brexit, people still view gold as that flight to quality #1 destination. That and probably, the rates, the treasuries, so that's been a huge driver for that as well. And for whatever reason, they don't see silver in that same light. Hence, we don't see a massive flight to silver when all things are going crazy in the broad economy out there, which is kind of interesting. So a lot of it drives down to the use case for the metal, of which there are much more limited for silver. That may change, but for the time being, more of the use case is still in gold. And of course, a lot more just massive presence out there in terms of market share and mind share on behalf of not just institutional, but also a lot of retail investors. It also helps too, and silver has this as well, but it also helps too that one of the better commodity ETFs out there, like GLD, is out there in a product like gold, because it holds a physical, and so you can trade it back and forth, and it allows a lot of the retail equity players to play along in a commodity like gold without having to perhaps take the intimidating step of diving into the futures options, which is what we're talking about here all the time, and the futures themselves. And a lot of back and forth trading and arbing between those products as well. So that perhaps accretes, all of that aggregates at the end of the day to a lot more volume for the big gold than it does for silver. I don't know, Nick, what's your take there? Anything I left out?
I think you got it pretty much answered, but another thing, you could probably equate it to the 10-year and the rest of the treasuries too. You did mention the treasuries. There's always sort of one that's the benchmark of that particular asset class. So in this case, we're talking about precious metals, and gold is the benchmark, 10 years the benchmark for the treasuries, and it probably also has to do with the price level, right? So you got a $20 future versus a $1,350 future. So when you talk about movement and ability to trade, there's just a lot more action there with a lot more potential profitability or a lot more opportunity from an option standpoint. But, again, it's all relative, right? It's a function of what kind of what you're looking for. And of course, I still think the best example is what you said. It's just gold is the standard. Gold is where people will flock when there's a problem in the economy or there's some uncertainty. So I don't see that changing necessarily. I mean, you'll see each precious metal have its day, but I think it's a function of the fact that it's the standard, the price level, and there's just not and just not the population out there providing the liquidity in the product itself.
Yeah, that's a good point. I neglected to mention the price of the underlying itself, also a very, very important part of it. Gold, much more of a premium product compared to silver on a per ounce basis. Perhaps it'd be interesting to see if they were somehow to hit equivalent price points, if a lot of that volume would switch or perhaps change. I'm thinking no, but you never know. That is, of course, a big driver as well. I think we got time for, let's see, one more here, Mr. Nick. Let's hit this one from Andy McMahon. He asks, hey, the volatility skew for most equity options is called investment skew. Is there a name for the different skews of commodity options as well? Well, great question. We touch on a lot of different types of skew and shapes of skew here on the old TWIFO program. And you're right, that kind of traditional skew shape that most investors are used to when they say skew, they're typically thinking of what you're calling an investment skew, which is a volatility premium to the puts, a volatility discount, shall we say, to the calls, and that traditional shape that most of you are familiar with. Now, here in the commodity space, it changes on a product by product and even, on a week by week basis, as we've just talked about in gold. Gold was heavily bid to the calls, and now it's much more symmetrical. We see a lot in the commodity space, that typical, what you might call that volatility smile, which is the symmetry, puts and calls having about equal volatility premiums out there. That we see that pop up a lot in the commodity space. Don't see that as much in the equity and index option space. We also see, like we mentioned in gold recently, we also see that in some of the other products where the concern is to the upside. Maybe there's a regulatory impact or something else along those lines. They want to keep the price low. That's where we see a lot of kind of almost a reverse to the investment skew, which would be, you can call it call skew. There's a lot of different names for it out there, but effectively the premium is in the call wing and not in the put wing, and there's a discount to the puts. We saw that not that long ago in soybeans as well, when soybeans were kind of limit up and things are moving crazy, and we were talking about how favorable it was to set up for collars out there where you could buy relatively cheap puts if you were long the future, sell pretty much overpriced calls at that point, and do that for credits or even money, depending on how you structured it, and have a nice cushion for your long futures position out there. So those things kind of set up a lot of different ways out there in the old volatility skew. We're seeing how Nick once again his remote location is losing us here. Let's see if we can get Nick back one last time here as we wrap up your questions. Great questions, by the way, everybody. We love to have you guys here fire off. You can always hit us up via the website, theoptionsinsider.com, via, of course, our social media at twitter.com/options, via Facebook, The Options Insider, via StockTwits, Options Insider, or via the old-fashioned way, questions at theoptionsinsider.com. Of course, all great ways to hit us up. Unfortunately, that music means it's time to bring to a close another episode of TWIFO, This Week in Futures Options. Before we go, let me check back in with my cohort here, my partner in crime, Mr. Nick Howard from his undisclosed location, a.k.a. Colorado. Nick, are you back, sir?
I am. I'm so sorry. I mean, my connectivity is just not great. And this will be the last of the summer weekends away.
Summer remote.
So I'm here.
But before we wrap up here, I know you guys are always working on a lot of cool stuff over there in the land of Quick Strike. What do you guys have coming down the pike that might interest our listeners?
Okay, so we got one good thing of note, and I kind of pretty general as we go through the weeks, but the one big change that we're making this weekend is that for our free version of Quick Strike Essentials that's available on the CME Group website, we are now publishing price changes throughout the day. So not only will it be settlement, it'll be settlement volatility, and time will roll forward throughout the day, but we're also having futures fluctuations throughout the day. So you'll get a little bit easier time pricing options then. Still can't change volatility there. We're still limiting that to some extent. That may change as well in the coming months. But for now, the futures will be moving around, and you'll be able to see price changes associated with the change in the underlying. So that's sort of the big one that'll be rolled out this weekend.
All right. Thank you for that, Mr. Nick, and you can, of course, check that out for yourself. All the cool features, I mean, he puts it out there for free, and he still keeps adding functionality to it. The best way to get access to that free version of Quick Strike is cmegroup.com/TWIO, TWIO. And again, that's all free. Just check it out, kick the tires, and light the fires, as they say. And if you start to use it a lot, you like it, you start hearing about some of the things we're always talking about here, like the quick skew and some of the enhanced pro-level features, well, then you can always upgrade over there at Quick Strike to see all the cool stuff that Nick and I are talking about as well. But you guys get a lot of that stuff already for free over there at the TWIO version, so check it out there as well. And on behalf of Nick and, of course, myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing, and, of course, for joining us live over there in Mixler land. If you are free every Friday, 3 p.m. Central, 4 p.m. Eastern, we'd love to see you there in the chat room. You can ask live questions if we have time. We always have so many questions, or we don't have time to get to all as they are, but sometimes when the live ones come in, we give them a little bit of pride of place here. So join us if you can in the Mixler chat room, and we'll see you next Friday, 3 p.m. Central, 4 p.m. Eastern, for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.